Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Friday, November 30th, 2012. All right, let's take a look at the S&P futures. Since the last update, it's right now. It's almost 3 o'clock in the morning on Friday the 30th. So this is a very late video. But you'll have it for Friday in the morning. So we're looking at this reversal that happened on the 28th. So this reversal on the 28th happened at 1384, and we had a high yesterday of 1419. So a pretty good range. So the reversal was based on basically a conversation in front of the press. It was like not an announcement. One was by Harry Reid. The next day it was John Boehner. The next day it was Nancy Pelosi. And then the president came out and said a few words. So this area, this 3-day play right here, this was actually on its way down again. This 3-way play is all about the fiscal cliff and what they're going to do about it, and taxes, and on ad infinitum. I mean, it's a very complicated process. I don't know if they're going to get it done in time. But it gave a little more to this. We talked about the left shoulder on this side, and then the Bendragi crown here with 3 heads on it, and then the right shoulder, and then it came down and took that out. It's right back up to this neckline and a little bit more. My line in the sand for this is 1421, and we're right now sitting, we had a high yesterday of 1419. I'll be willing to let it go up a little bit higher, 1421, 1424. But see this area down here, which I stretched out. When T5 started going below 0 and then started coming back, you could see that it was changing on the 21-minute cash that I'll show you in a minute, and on the 1597. But the thing about dips like this is when it comes back down again and comes back up over the 0 line, and then it comes back down again, that is a huge signal for a short. And the same thing in reverse. If it starts down, comes back up a little bit, teases it, comes back down, and then goes back up. So I think that this is part of a reversal to the downside, and it's barely skimming along that line. It did hit negative on the 21st, came up a couple days, and it's just skimming along there. In the meantime, T1, 2, 3, and 4 are below 0, and they've made a little bit of progress to the upside, curving around here on all these waves, but not really enough to be concerned about. You can see right here at 1421 is firmly in the neckline of this crown that happened over a 4-week period, and it's the top that happened in April and in 2 times in April, the 3rd and the 30th. But if you look back, it also happened 1421. It was also the top that happened in May of 08, and it was the neckline that was produced all the way back from December 06 all the way through. It was support, it was resistance, it was support, and then it's been resistance ever since May of 2008. I seriously doubt that it's going to make it through there. I am 100%, I mean not 100%, but all of my plays right now are on the put side. So I'm going to do some side-by-side comparisons in different time frames. This on the left is the daily, on the right is the 144 cash. And you can see on the daily, it started coming down on T1 and flowed right T1, T2, T3, T4, and almost T5, starting on October 9th. So if we move this cursor over a little bit, it's equivalent to what happened on T4. If you look over on the left-hand chart, as it's moving on T1, T4 is doing the same thing. Well, T4, even though this big turn happened right here, they are still all below zero, except for the shorter term ones. Now, also what I did was if you draw a fib chart here from back in June to the high in September, this bounced off the 618. All right, let's get rid of that, and we'll do a fib chart from the top of what happened in September to the low just a couple days ago, and we are again, this is 618 on the upside, and it's right near the 1421 line in the sand. And if you look at these peaks all the way back, each time there was a peak, there was a retracement of about 50 points. So you can look back in time. Every time there was any kind of a little peak, this was the retracement of actually 100 points on the S&P. These peaks were each from 27 down to, let me see, this was 1231. This was 90 points. So there's something that's going to happen very, very soon now to the downside. It probably won't happen tomorrow, because tomorrow is the last day of the month, and everybody who thinks that they're missing out on what's going on on the upside is going to want to play something. So I'm looking for this to either be flat to up slightly tomorrow, and then start down next week in December. And we could have some surprises. We could start down tomorrow. I'm not positive about it, but I'm willing to give it tomorrow. Okay, to continue the comparison, this is a 144 cash on the left, and now 21 cash on the right. And you can see that they actually turn. Now, this is an example of something that I told you I was looking on the daily, that it comes up. It's still on the downturn, but it comes up as an indication that it's ready to turn, but they're using smaller waves to do it. And then it comes back down again in the second turn up, right here, right at this point on T2 on November 16th. This is when it just takes off, and you can even play this at like toward the end of the day at 1:30 in the afternoon Central Time, and then it just took off like, it gapped up 25 points, and then just like a pro gap up, and just kept on going. So again, this where this gave you, kind of teased you to the upside a little bit, but it went sideways, came back down again, and then pushed up. Excuse me. The same thing is happening here. It's teasing you to the downside, moving up. I'm sorry, it's teasing you to the downside, moving up a little bit after it's been up, teases you to the downside, moves above zero, and then the next move should be down, and that should be a monster move down. And already we're seeing on the longer waves, on the 21-minute, we're seeing non-confirmation. So this peak right here compared to 1407, and 3 days later, this peak at 11 points higher at 1418, and these are, the cash prices are higher highs, and the wave on number 3 and number 2 is a lower high. That's why I think this is going down. All right, if you're swing trading the S&Ps or even day trading them, this is today's hash mark. This is Thursday's hash mark, and this is the beginning of Wednesday at 8:30 in the morning. and you can see the T3 clearly went above zero right around 9:20 in the morning and stayed above zero until almost exactly this peak at 1416, came back down again, and the shorter term ones actually started coming back up again, but the longer term ones kept going below zero. So this is another indication, and even on the short term waves, that I mean the even on the tick chart, but the longer waves, that even though this came back up and met the old near the old highs of today, the waves kept continuing down, and then wave 4 rolled into wave 5 on the downside. So my take is we're actually flat right now. It's almost exactly 3 o'clock in the morning. We're down 25. We were down. We've been actually down 550 and up 100. So it's moving back and forth. It's jockeying into position. I am definitely playing this to the downside. Let's look at some stocks. Okay, on the left-hand side we have Goldman Sachs on the daily, and it did have a nice spike for a couple days, and then spiked down. It took basically 2 days worth of trading out. It started on Wednesday down, and then ended near the high of the day. Thursday it started up and ended down. So it's kind of like jockeying sideways. In the meantime, T1 is moving more deeply below zero, and T2 is 0.27, and it looks like it's like 1 or 2 days from being just an all-out sell. And also, if you look at this carefully, you can see this dark blue line here. That will probably be below zero before some of these other waves are, and that's the most important. The dark blue wave is the most important one. That's the long, as I said before, it's the longest wave in my arsenal. If you look at this action that took place in here on the 15th of November, this is the 610 tick chart on Goldman, and you can see from November 14th to the peak in November 27th. So that's like a 13 days. When this moved from here, when this moved from trough to peak, it hit the exact 60% Fibonacci retracement at about 116.72, and then bounced from there. Now, you would have been covering it. Number one, because the wave was so deep, and every time there's a really deep wave, it's usually an indication that it's going to bounce back. Well, actually it didn't. It happened here, it happened here, it happened here. This is a long trend down, so it didn't happen. But it went sideways to down, and then you would have gotten back in here. So this went out, you would have covered. If you were playing this according to the daily, then you're only playing this on the downside because it has a downside bias. So you would get in here on the 27th for a 120 to 116 move, cover it right about here at 117, and then wait for this to come around below zero, which could happen. In spite of the fact that Goldman, in spite of the fact that the stock market went up today for the most part, Goldman never participated in the move. It was up very early and then down most of the day. So I'm actually short Goldman at about one. I waited for the bounce here, and I'm short about 120 because I am playing the daily as a swing trade and kind of roughing it through the undulations of all the, like the the Boehner, Pelosi, and Reed arguments, conflicts, whatever they're doing, whatever's moving the market sideways in every which way direction but loose. Okay, Apple Computer was up about 11 at one point. It finished up 6 points on the day. It bounced. It actually hit our target. My original target on that was was way back here from 665, 662, and my target was 513 on the 377 exponential moving average. It went a little bit. It wouldn't. Whoops! It went a little bit below that, and now it's run into all this congestion. This is the 89 period. The yellow is the 89. The red is the 55. The green is the 144. They're all exponential moving averages. In the meantime, this has gone nicely below zero on T5, and this has taken an expected bounce, but there's a lot of supply in here. There's a lot of supply. People end the year, if they think the market's going to move down, and they've had this tremendous profit of all year long, they are absolutely not going to sit on Apple. They're going to dump that thing like a fire sale. Doesn't matter if they sell 10 million iPads. We are moving up to 50% retracement. That is 606. Be nice to get it up there to short it again, but I don't think it's going to make it. On the, well, let's get a better one. I use 610 for Goldman Sachs, but I like using the 987 because it trades a little bit more. That's kind of sloppy. Let me see where the day started here. All right, that's the start of the day today. So it was up. This isn't really clean right here because it's too sudden, but this is a nice smooth one right here. So this was at 590, and it ended up at 586. So not much of a play for a day trade, but it is an indication that this is kind of, you can see the as the way, if you just follow T3 right here. Actually, you can go all the way back here. When it starts going below zero, Apple goes down. When this goes above zero, Apple moves way up here. Just follow the wave, follow the cash price up here and down again. That's kind of like a sideways move. It's a little bit like 6 or 7 points, and then there was a move to the upside here, and now it's beginning to fall down again. No reason to believe why Apple will not continue on the downside. I don't have a specific target, except that my own thoughts on this are that it'll at least come back down to 519, and it probably will come down to, this is the 377, the next one is the 610 exponential moving average at 455 is very possible. And actually, I don't even want to think about 380. It'll take a while before it gets there, but I think in a down market it may actually reach that. But the main point of this is, I think Apple's cooked, and take your profits and be happy that you made some money. All right, lastly, Google actually took off a little bit more than I thought it was. It looked like it was about to roll over and die right here on the daily chart on November 26th. You can see on the 144 tick chart here that it went sideways for a while and then started taking off on, especially on T4 and T5. And T5 is still above zero. So there are these little undulations on the waves here that had very short selling sprees, and they came back down. So let's look at 5 minute on this and see what it looks like. T3, okay, T4 below zero right here. And at 668, and you would have covered at 665, not a big play for 3 days. But then when it went above zero on November 27th, that was a huge play. So it was 665 up to 690, up to 693. And it looks like T3 is going below zero on the 5-minute, and it's still above zero on T4 and T5. So let's look at the 21 and see what that looks like. It's probably not ready to roll over just yet. I wouldn't take a chance on this rolling over until T1 was below zero. So you have to, if you want to play it as a day trader, just play the 144 for very short-term moves. We'll look at one more, Amazon. Let's look at the 610 on Amazon. And Amazon is just this powerhouse. It looked T1, T2, T3 looked like it was going to give it up a little bit, and it actually did, but it only gave up like from 245 down to, it only gave up 4 points before it whipped around and continued the trend of T5, which is still well above zero. In the daily, daily's kind of turning up a little bit. We are past the 60% 618 retracement. So, but we're into a lot of overhead supply from September to October. So we'll have to wait and see. This is a very, very extended here. This line up here. In fact, we draw a trend line here. I think that the first indication that anything is wrong on the upside with Amazon if it breaks below this trend line. So just draw a trend line from back where this started in November 15th, and you'll get an idea. And look at, once it breaks that trend line, then look for the 377 target of 10 points away. And if that happens, and by that time, because we have some massive non-confirmations, you see the C on the 21 cash, this is the non-confirmation high, this is a lower high, and this is a much higher high in the cash. So you got to look for things like that to see what's happening. Same thing, the dip below, the dip above, and then when it comes back down again, it should easily hit 237 and then just continue on down. So that's all I have for tonight. Tomorrow is the last day of the month, so the next update will be December 2nd or 3rd, whatever Monday is, the Sunday night video for Monday. Good luck trading, and I will see you at the next update.